Welcome to week 21 of my Trading for a Living challenge, where the goal is to make over $1,000 every single week trading the options wheel strategy. I'm using a $125,000 account. We are 21 weeks in. And if you are brand new, there's a playlist. Link is down below, which goes through every single week of how much money I made, what the trades I placed to make that money, and my thought process for the next week. So let's get right into week 21. So overall year to date, I have made $18,639. Now, if we compare that to the goal of just over $1,000 a week, I should be at 21,602. So I'm down 14%. But if you actually look at the time I've spent on this overall challenge, where a 9 to 5 job is 40 hours a week to earn the over $1,000 a week, I've pretty much done a lot less than that. I've only spent 13 hours. I've not even done a week's worth of 9 to 5 work so far in 21 weeks to only be 3 grand behind. And this just shows that if you are into trading or how you can make a decent amount of money trading, but imagine if you had a side hustle or an online business or even a part-time job to supplement the income, then that again, you'll be making a lot more money and still keeping your workable hours low, let's just say. So this is what I think is really important, because time is the most important asset we all have. Yes, money is important, but I'm showing you guys that it is possible on a very small account. And I'm in a lot of trouble in this. As for those who've been following me, I'm assigned a lot of shares, especially on Tesla. Tesla, just looking yesterday, was down 8%. It just keeps falling, but I still generate the income by selling covered calls. And again, if you are brand new, week one goes through the strategy, and just watch the whole journey. It's been a good journey for me to go through and kind of sort out my thought process. So if we have a look at week 21 in isolation for last week, I made $879. That was all done through Tesla, because I do have a Meta position open, but I rolled that out because I'm in a lot of trouble with my covered call, which we'll also go into. So I missed the goal by $150. Even though Tesla is still dropping, I'm still picking up decent amount of premium and just waiting for that stock to really turn around. And again, I didn't spend a lot of time. I didn't even look at the charts. I was out and about on a Friday and I realized I need to do my roll for Tesla, and just had a quick look, thinking about the various strikes, and decided on a strike. And we'll see how those strikes played out on the chart in the next slide or two. So we have a look at the actual trade. So I document all my trades every single week, and as always, I share a screenshot so you can pause the video and have a look to see what I bought, what I sold. But I've also done it in a table view just to make it a bit easier. So from a Tesla perspective, fairly straightforward. So I bought back the 192.50 call for $3, and then I sold to open a brand new position. Again, I had to lower down my strike as Tesla kept dropping to 157.50, and picked up $882, which nets you out at 879. Now, I've been getting some questions there on this. Is I can get early assigned on this option. So therefore, I am forced to sell my 300 shares at 157.50, and I was assigned at 282.50. So there is all of this deficit here that I will lose out if I'm early assigned. So that is a risk, but as long as Tesla share price does not go above 157.50, there's no chance of early assignment, because you might as well just buy the shares at the market as opposed to assigning the option. It doesn't really make any sense. So if we have a quick look at the chart here on Tesla, and look, there are two main key reasons why Tesla is dropping. And the first reason, which most people know that are into the stock markets, and if you're watching this video, I'm assuming you've heard about all the Elon Musk challenges with Twitter and all of these other different things. That is the first thing. The second thing is, and I've been saying this for a while, is Tesla is overvalued. Now, I have Tesla's fair value price in the 90s or the 80s. So to get back to fair value, especially with the macroeconomic challenges, I still think Tesla will drop more. Now, you might be saying, why do I own 300 shares at 282.50? I didn't want to own 300 shares at 280, 250. But when you're trading, it's slightly different to when you're long-term investing because you have to trade around the current price as opposed to waiting till a stock drops. So there's still a lot of volatility, a lot of premium to be gained in the stock. So that's why I'm still doing pretty well on it in terms of premium. But, we have to get a pullback of some sort at some point. And hopefully before the current week is out, we do get some sort of a pullback. So then I can get a bit more premium on the covered calls and, lift up my strike slightly. But you can see here, every time we've kind of got oversold, we've had a leg up, oversold, leg up, and now we're oversold again by a lot. The RSI is currently sitting at 20. We have to get a slight pullback up. It can continue going down, but I ideally want to sell covered calls when the market is increasing. So pre-market it's up $3, and I'm shooting this on a Wednesday, so we still have about 2 more days. And my current option is pretty much not worth anything. I've been thinking of doing a 2-week roll because of Christmas, New Year, bank holidays, and the number of trading days that I'm considering as well. So that could be something that's quite interesting. I'll still do a weekly video for you guys, and we can review just to see how that trade is positioning. And again, I'm assigned 300 shares at 280, 250 all the way up here. It's going to be a long time before Tesla goes up to $282.50. So I'm in this position for a while. I'm just rolling this position every single week currently, picking up premium, but I do need something to kind of support it. So if we go to Meta, I have a covered call. So I'm assigned, actually, let's look at the chart. The chart will be actually a bit easier to understand on what's actually going on here. So I got assigned 100 shares and then 100 shares. I got at 155, 100 and at 124, 100. So therefore I've netted out at 139.50. I sold a 96 covered call, and when not the last inflation report, the inflation report before, Meta made a complete move up, which is good because I'm getting closer to my current price. However, this cover call's in the money. So if we go back to the Tesla example where I said about early assignment, here's an example where I'm in trouble if I get early assigned, and there's greater risk of early assignment. And the reason because is this option is a lot more expensive for me to buy back than what I sold it for. And that's what's causing the problem. So what I've been doing is, since that option, I originally sold it at the 100, no, it was 100. I sold it at the 95, and then I've managed to roll it up by $1 to take $100 of risk off the table and get it to 96. This also expires this Friday, so I need to do something with it. I did this arrow a couple of weeks ago, if you guys remember. It still hasn't hit its December pivot. It's been in this kind of range. Will it do so? I don't know. I need it to kind of hit this pivot to make this roll, because this is inactive at the moment. At the moment, this ain't making me any money. Because if we go back to when I first did the call, at the moment, I've made $171 since the beginning of November, right? And we're at the 20th of December. So this option here, or this amount of capital that I've got invested, this 27 grand, is not really making me a lot of money. So I need to do something with this. And that's what I'm thinking of doing. The other thing to look at is in terms of my trading capital, got 12 grand available to trade. Now, Tesla's actually getting at a good enough price now. If we go back to Tesla is at, the 140. So I could start selling the 125 put, right? And I'll probably get some decent premium for it. So that's one option. The other option is what I'm looking at is starting to sell strangles. So what strangles are is selling an out the money put and an out the money call, from a trading perspective, and looking at 30 to 45 days out in expiration on high implied volatility stocks. So that's another option that I do have available to me that I might look at. So I need to make this 12 grand work for me now, considering that I've got this 27 grand or 28 grand on the sideline. I'm still churning this 84 grand. So if we look at the total premium so far, I've collected 16.8K. So if I just do that as a quick percentage, 16.8 divided by 84.7, 20% return in 21 weeks. I'm not going to complain with that, with those results. If I keep going, eventually I'll generate on this to get 100% return. But you got to remember, I'm withdrawing this money to pay for expenses. So it's not like I have a break even price or anything along those lines. So those are the things that we need to also consider. So hopefully that was useful for you guys in terms of the information. Very quickly, I'll be rolling this one. I'll be rolling this one as well. More than likely, I will put the 12 grand to work. So stay tuned to next week's video to work out what I do there. Make sure you like and subscribe, and I shall see you guys in the next video.